So we might as well get into it. Why don't we take a look at the week? So week starting December 11th, ending December 15th. Looking at my trader view stats. So yeah, go ahead and join on YouTube. Of course, as always, everything that I'm going over is for education / entertainment only. This is not financial or investment advice. Just going over my own stats, how I trade, best trades, worst trades of the week, things I did well, things I did badly, stocks that I did well on, stocks that I did bad on. Just looking at this week. Okay. Yeah, so if you joined just a minute late, go ahead and check the link in my bio for my YouTube channel. I'm streaming live on YouTube because it'll be a lot easier to see my screen over there. We've got live chat on Instagram. We've got live chat on YouTube. So feel free to ask any questions you might have. Say what's up. But anyways, we might as well start getting into it. So total for this week, just at 3150, which is okay. Honestly, not very good, but green at least. I would expect a decent week to be at least 5,000. So averaging $1,000 a day is kind of my metric for that was at least like a decent day, or at least I traded decently that day. And the reason I say that is because we can look at my whole December, and it's been pretty slow for me this month. I'm doing okay. It's green 4,500 so far, but not without a couple big mistakes and big mistake days. So the reason I say it's okay, 4,500, is even with a $6,500 green day last Wednesday, I came out of last week up like $100 on the week. These two red days were $6,000 red, and then so that's like 6,900 red, 6,450 green, 470, so 6,920. So even with a $6,500 green day last week, which was my biggest day of the year so far, still pretty much an entirely flat week. What's up, Marcelo? I know you crushed it. I know you crushed what I did this week. But, always good just to be on the right side, right? Better than red any day. So, did decently this week. Monday was a really, really slow day. I can click in and we can see what the day looked like. Unfortunately, I was actually pretty solidly green at basically 4 different points during the day, even 5. And I just kept having, here's 1 loss, 1 win, 2 losses basically, and right back up. And I could have called it a day much earlier. I could have called it a day the 3rd time that I hit 900 on the day, or the 4th time that I got close to 900. And then, so finally I went to the gym, and right when I got back, I took a $500 loss, made just a tiny bit back, and got out. So Monday was pretty much a scratch day for me. Tuesday was a little bit better. Still not great. I would say 1 to 1,500 on the day for me at this point is like a solid base hit day. Nothing to get super excited about, but at least happy to be decently solid green. Tuesday was much cleaner for me. I managed to hold on to my gains pretty well. I did hit a little spike here. I think this was probably after the gym as well. Hit a little spike here to 1,800. Gave it back. Finished just under 15. That's fine. Wednesday was a tough day for me. I overtraded like my life depended on it on Wednesday, and because of that, I actually ran out of trades for today, so I had to stop trading today super early, which is fine. I locked up my gains, but I definitely was not able to hit some of the afternoon runs that there were today, which is fine. I just need to do a little better next week. I went full degenerate mode on Wednesday, and unfortunately, I ended the day down just about 1,300, which itself is not that big a deal. It's not really a big red day. I mean, it's solid red, but normal. The unfortunate thing with that is it's a $2,500 swing. So, what's worse, going green to red on the day or just starting red? I don't really know, but, it kind of hurts when at one point in the day you had $2,500 in your account more than what you ended with. So that was really frustrating on Wednesday. And because of how many trades I took and how many shares I traded, which was 1.4 million shares basically, I also owed $122 in these commissions and fees since I'm on TD. These are basically like FINRA SEC fees because I don't pay actual commission or ECN fees or anything like that. But, those stack up too, and that's something you have to consider as well, even if you are on a free broker. So, not happy with the trading there on Wednesday. If I had just managed to hold on to these gains and just stop when I was up 1,000, and the thing was, Wednesday, for me at least, was not hot. It wasn't super easy getting green 1250 on the day, which was where I was at like 3 separate points. I was green about 1250 here, took a small loss. I think I went to the gym when I still had $1,000 in my pocket. Came back, gave most of it back, made all of it back, a little bit more even, and then just gave all of it back. And those days really suck, but they are part of it. And seeing this has me really motivated for the rest of December and the rest of next year, because what I've noticed lately is if I click into almost any of my red days, probably, let's see on this one. So this was just a tough day to start with, which usually doesn't happen like that for me. See, I was green at least at one point on this day that I finished red. I am pretty sure that I was at least decent green on this day that I finished really red. So this was a $4,000 swing, which is really unfortunate. So these bigger red days that I have sometimes, I know a lot of them started off green, which on one hand kind of sucks. This was just a tough day, apparently. 2,700 red on this day. I was back to flat for just a second and then back to solid red. November, I just did not trade well. For some reason, that one's not showing up. But, and here's another one. So, down 2,000, up over 2,000, up like 2,500, and then finish the day back at negative. Actually, that chart seems to be wrong, not negative 1,200. So basically the gist is I know that a lot of these days, especially even these bigger red days, some of them I just went red and never recovered. But a lot of them I was green, at least at one point, and sometimes solidly green. So, I was almost 1,000 on this day. I don't think this spike down to -4 actually happened. Sometimes TraderView charts do get messed up a little bit, the P&L charts. That one's not showing. But anyways, reason I'm going over this is I'm really motivated to change the way that I'm trading and essentially the way that I'm locking up my days, because I'm just giving back a lot of profit. And I know that if I just stop when I'm green, which is most days, that can have a huge impact on my bottom line. And it's been a good year. I'm up just over 6 figures on the year, but I would like to double that next year, and I don't think that's at all unrealistic. So let me see what kind of comments or questions we have so far. Not too much yet. So, question on YouTube: how am I liking the market that we're in? Feels like things are starting to move again. Yeah, I kind of agree with that a little bit, but it's definitely not what I would call a hot market yet. Um, we had C4 this week, and I can pull up my charts on that. We had C4 this week, which honestly performed better than I imagined it would, but it never really opened up and started squeezing. You can see, even with these strong moves up on, this was yesterday when it had more of an extension day, even on these moves up, you can see all the topping tails here in these candles and these candles and this candle and here, big rejection all the way from like 780 down to 7. So, 10% of the company's value in these 2 minutes. And then a big rejection here, big rejection, and then complete reclaim, and then sell off, and then if you're kind of like a hyper scalper, I know some guys really crushed it, especially on C4 this week, and I did okay. I had 700 on it today. If I take a look at detailed for let's see, that's back to November. If I look at my detailed for the week so far, C4 is actually my biggest gainer. And at least what I can say about it is I'm up about 1900 on C4 this week. My biggest loser is JTAI, which is about half of my biggest winning stock. So the only problem is I took a lot of small losses on a lot of these things, which kind of just tells me that I need to be a little bit more selective, because when things are moving, I have no problem making gains on them quickly. And you can also kind of tell that from my largest loss, 700, versus my largest gain, 1200. And actually the largest gain from this week was on ADTX, right out of the open on, this was Tuesday. So this probably was the best move of the week. It was really clear and really strong in a way that we haven't seen in a long time. I can't remember the last time we saw something like this just halt straight up out of the gates. And what I really liked about it was it had this big move up. It had this big move up, consolidation, continued moving up, and then it got really choppy here at like 730 in this area. And when I see that, obviously, there's sellers here who don't want it to go higher. So it rejects, and this one was pretty nasty. 735 all the way down to just under 6. That's pretty nasty. So at this point, it's looking like kind of done, like not really a watch into the open. And then it finds support here and doesn't go any lower. And it kind of makes sense because it's the top of this consolidation range here. And it's still extended on the day. So at that point, when it had sold off there, it was still up like 66% on the day, which is still pretty solid. And then what it starts doing is it breaks VWAP, comes back down, sets in a higher low, comes back up, and then I really liked this action right into the open, because sometimes what we see is the stock just kind of runs right before the open, and then there's nothing left for people to be interested to buy at the open. But this opened right at 703. It popped to 730, held there for just a second, retested down to like 705, and then I actually got in late. I was not convinced that 7 was actually going to hold, so I didn't get in there. But when it popped with speed right back into the 730s, I took, I think, just 1,000 shares in the 30s, and it flew to the halt level 770. It pinned. I held the whole position, just 1,000 shares. It gapped up 60 cents, so I actually got like $1.20 out of those 1,000 shares, which is an awesome trade. but I just wasn't totally able to capitalize on that move because I was really conservative. We haven't been seeing moves like this lately at all, and what I've been doing a little bit more out of the gates lately is starting with smaller size until we kind of get a feel for how the stock is moving with, um, actual market volume rather than just pre-market volume. So this was a great trade just with small share size for me. 1,000 shares is pretty small size, especially on something in the like $5 to $10 range. Usually, I'll be looking to trade more like 2, 3, 4,000 shares, depending on the price action um, and if I have a cushion on it, stuff like that. Um, so ADTX was a good stock for me this week. That was my biggest win this week. $700 loss, I don't even remember, was on CCCC. C4 was, I thought it was pretty difficult to trade, and I was just talking about why I thought that. Yesterday, it definitely had a bit cleaner action to the upside. I forget. I think I was up like 1,000 on it yesterday. I don't remember. But then this was Wednesday, and you can probably tell from this 1 minute chart here that it was a little bit choppy. You had big range out of the open, and then it finally kind of consolidated. If you didn't catch these big candles to the upside, it was really not that difficult to get chopped up on it, because you have huge range per candle when including the wicks, although the bodies of the candles were actually not that big, because you had these extension moves at 406 and then back down to 388, and you had a couple really nasty candles too. Not necessarily right in here. This sell-off kind of makes sense. It's just kind of a pullback from 436 down to 385. Still 50 cents though is kind of a lot on a $4 stock. We had this candle here that dipped hard that should have launched that through that resistance line, and it kind of tried to, but then found resistance again. There were some other kind of nasty candles on it. This candle here went straight up from breaking out of this level. I haven't seen something pop this quickly to a whole dollar in a long time. So it popped to 5. It held just under for a few seconds, and I took 2,000 shares here, and then you can kind of see what happened. I stopped out for like a 30-cent loss. This was probably my big loss on it. I went from up 1,000 on the day on it to like 300. That must be where I had my biggest loss. And then it does this. It just curls and grinds back up. So I kind of found this price action to be pretty difficult. And then you also have moves like this where, we're testing this whole dollar at 6. You finally get the break. It breaks to 603, and then the next second it's down at 540, even 533. So, not my favorite stock at all in terms of price action this week, but I did do decently well on it. If you were not able to get in tune with how it was just dipping and popping and dipping and popping, it was really a difficult stock, I think, because patterns weren't really working out that well on it. It just didn't really seem to respect technicals that well. So I'm decently green on it. I know people who are red on it. I know people who are very green on it. Then we had NXTP, ADTX, VRCA, IONM. Nothing really especially of note this week, aside from just the fact that I need to hold on to my gains as well as I can. So if I had locked in my gains on Wednesday, this would have been a $5,600 week, which is a lot more solid than the $3,150. So that's kind of my game plan, reviewing this week and then looking into next week. And we have seen a little bit more action lately. So I'm optimistic and hopeful that that continues into next week. Do I prefer breakout buy or dip buys? It totally depends. When the market is right for it, I love trading breakouts. Um, and ADTX is a great example of that. When things line up right, you can have some really explosive moves. This went from this kind of resistance spot at like 740, 730, um, pretty much straight up to 950. So you can get some really, really nice moves. NXTP, I did well on this week. That was yesterday, Wednesday. Um, but still, like this is what's telling me we're not in a hot market. You have a move up like this that extends like crazy. A $1 stock goes 100%, and it wasn't even a $1 stock. It was below that. Previously, it was like 90 cents into the close of the previous day. You have a stock like that run up to 180 and then straight from 180 in the same 1 minute candle back to 140 and 130 by the next minute, and then chops around. This is something that I'd like to do better on next week, and I think I did actually catch one of these on STTK this morning. Was a double bottom. We have been seeing, although we're seeing some of these really harsh rejections, a lot of them are not halting down, and something like this, I would expect that the next thing would make sense would be a halt down after that huge rejection. And I mean, look at the selling volume in this. This candle here there is no buying at all. So, why can't this halt down? So it kind of tells me someone's propping it up and they want to run it up again to do that again. Market makers must be making a ton of money right now because they're doing a really good job making traders emotional. But we had this double bottom here that I didn't catch at this point, but it came into it again here, 130. Next thing you know, 20-cent winner on a $1.30 stock, and you're in a couple thousand shares or so. That's a solid gain. And then this is kind of expected, this double top into this major resistance level. And I think that was it on NXTP. Yeah, pretty much. So what I'd like to do better next week is recognize certain patterns like that a little bit better, and not necessarily even just recognize them, but act on them. Because that's what the market has been showing us. So answering the question, do I like breakouts or dip buys better? It kind of just depends on the market and what has been working best lately. Have I heard anything about Schwab's settlement margin rules? Hoping they don't make you leave Thinkorswim. Yeah, I have heard a little bit about it. Apparently Schwab does not allow traders to use margin on stocks that are under $2, which means if you're trading a stock under $2, it will basically use cash. It will use your account value as cash instead of margin. And when you are trading cash, it takes 2 days for that cash in your account to settle from those trades. So say, for instance, you're trading a $2 or an under $2 stock one day, and that's fine, but you're only able to trade as much of it as you have dollar amount in your account. And if you go over that, you can get a good faith violation, which is just kind of a mark, and they send you an email and they say, don't do that again. You're trading with unsettled funds, and that's not allowed. And then especially if you do that again, like the next day, that's obviously going to be completely unsettled funds if you're trading another stock under $2 the next day. So possible solutions are just add a lot more money to your account so you don't run out of unsettled funds to trade $2 or under stocks, or just don't trade those stocks, or maybe they change that policy as more people transition from TD and Thinkorswim to Charles Schwab Thinkorswim. So that's my thoughts for now. Luckily, stocks under $2 aren't my main focus and my main best winners. So if that really is how it stays, I'm not totally sure what I'll do. Maybe I'll try just adding more money to the account so that I don't run out of cash, unsettled cash to trade those stocks. Maybe I just don't trade them at all. I don't know. I could probably say pretty confidently that stocks under $2 don't make up a huge portion of my gains. And I'm not really sure where I would find that. Maybe in advanced. I don't know. So why do I use DOS instead of standalone Thinkorswim? So there's a couple reasons, and I started using DOS last year after we did the meetup at the Warrior headquarters with Max and Hemong, Chris, Manoli, Jess. One thing I noticed was Jess, Hemong, Max, and Manoli all used DOS. Jess used DOS with CMEG. He's now, I don't actually know what broker he's with now, but it's not CMEG. But you know, they're all very profitable, very successful traders, and I think it makes a lot of sense to emulate what people are doing who are having a lot of success. And so that was kind of one reason. But aside from that, the level 2 and the time and sales on DOS are much more functional. You can see the color gradients on my DOS level 2 here, super different. And you have green, white, deep red, green going through time and sales, whereas if I come over here to Thinkorswim, the gradient is just blue and like barely different shades of blue. On my phone on Instagram Live here, you can barely even see that those are different shades of blue. So visually, that is not helpful for me at all. And trading, especially the speed of trading that I do, is so dependent on pattern recognition. And using DOS now, when I see a burst of a certain color or something happening on level 2, it is like a subconscious thought process at this point that my fingers and my hands on the keyboard and the hotkeys just act on, and I don't have to take that minute to pause and think, I just saw this happen, what does that mean? And it allows me to manage my trades much quicker, whether that means I see a burst of something and it gets me into a trade for a breakout or a dip, or it gets me to basically panic out before the actual drop happens. So those are a couple of the main reasons why I use DOS, aside from offsets on hotkeys, which I don't actually use that much because I almost entirely send market orders. What are my thoughts on futures trading, and will I ever consider it? I'm not interested in futures trading. I don't know that much about it, but it's like, why would I start over with something totally from scratch when I already have multiple strategies that work really well and just need refinement? Can I show you how I draw support and resistance? What do I look for in my levels, daily, weekly highs and lows? Yeah, so let's take a look. I forget what stock it was that I was drawing levels on earlier. Was it STTK? It was a stock that I traded today. Was it VRCA maybe? I think it was actually. Yeah, so let's take a look, and we'll make this the bigger daily chart there, and I will just get rid of view up for now to make the chart a little more clean. So when I'm drawing my levels in, this is what my daily chart looks like. I have the 9 EMA, the 20 EMA, and then the 200 EMA, and that's it. I don't have view up on my daily chart. I don't think it's necessary. But what I'll do is I just basically look for major pivot points, and I don't actually mark every single daily candle because, you know, you'd have, let's see how many levels you would have in there. I don't mark every single daily candle because it would just be a lot of noise. You'd have this level, this level, this level, this level, all of that, and then here, and then here. And it's just like, you know, it's kind of common sense to think that you might have resistance around $5 here. And these low volume days here where price action was just kind of making small moves, I don't count them as significant at all. So what I do is I look for more major pivot levels, and especially days that traded heavier volume, because on a day that trades heavier volume, you're more likely to have people who are going to be providing support or resistance, basically. So on VRCA here, this is how I would draw my my levels. We've got this major pivot here. This is the next major pivot. This is the next major pivot. And this one actually leads to a gap. And the way that I usually look at these gaps is, you know, here's the level. And then if you go back just to the previous candle before the gap down, that would be up here. But this was such a fast gap down with really no warning that this level here, the bottom of this range, is probably also going to be important. So I would count this gap from 591 to 652, and then the bottom and the top of this candle here, I would count it, and especially because you can see that there's some resistance on the daily right here from these candles. So that's how I would be drawing my levels on that chart. I don't look at weekly highs and lows. I just look at daily. The longer time frame you go, basically the more noise you eliminate, but I'm not trading on a daily or a weekly time frame at any point. So I am more interested in daily levels because I'm not looking to hold any of these overnight or swing trade any of these stocks. We're not in the market that calls for it at this point, I don't think, especially on small cap stocks. Most of these stocks are not good investments, at least at the prices that we're trading them. When they pop up because of news or because of a technical catalyst or whatever it might be, a short squeeze, the inherent value of these stocks and these companies is not, you know, 200%, 300, 400% of where the stock started on the day. Every now and then you get a stock that has such a major catalyst, FDA approval or whatever it might be, that really does inherently kind of change the value of the company, but usually still that's not going to be a 100% or a 200% difference in the true value of the company. So if something is up, you know, let's see, this was a 70% gain right there, and then compared with the day before where it closed down at 376 up to, what did it hit, 692. So it was close to 100% gain. It doesn't make any sense for me to be holding these, so I'm not really interested in looking at a weekly time frame on these stocks, at least. Something that has more of a setup, maybe. Like I was kind of stalking CCG a little while ago because, I mean, you guys should be able to tell me why, right? We had a move up to 200 and then a pullback and sell off and sell off and sell off, and then it flattened out. And I was watching it around this level, 550, because it seemed like it just wasn't breaking down through it. And I was looking for a day that had a candle like this on this kind of day. with volume specifically, but we never saw one of these big green candles with volume come in. This day here had a nice pop, but it was on 100,000 shares of volume. And, if I'm trying to send 2,000 shares in to buy, 2,000 shares to sell, that's 4,000 in literally one trade, which is 4% of the entire daily candle. There's just no way that my orders are going to execute well in that. There's not enough volume to trade it, literally. So there was nothing for me there, but can kind of keep it on watch again. So let's see, what else do we have? When the stocks are trading into the day, am I taking intraday levels as well into consideration? And do I sell when I come to a pivot point? So yeah, that's a good question. I'm trying to think of a stock that I can use as an example. Which one was it? STTK is a great example of that, I think. Because look at the daily chart here, it looks fairly straightforward, but if you look at the 1 minute, or actually probably let's look at the 15 minute, what you can see here that you don't get to see if you're only looking at daily candles, unless those daily candles include after hours, is this spike up here and this major resistance level, and that matching up with this spike up here, and you would see the daily, the high of day right there. But what this looks like to me is potentially a really clean, basically daily bull flag. So this is an ascending triangle, and when I see these, basically what I'm looking at is they usually break the flat side, whether it's ascending or descending. If it's a triangle like this and there's one just totally flat side and one diagonal kind of working up or down into that flat side, usually they break the flat side, and we have maybe some shorts in from here. We have maybe some shorts in from here, here, here. So they're kind of thinking like it's really safe to go short on this at 750, but what if we break 750? Then it tried it this morning and failed, but how many times do we have to try it before shorts kind of just lose confidence and bail? So I'm pretty interested in this for next week, and part of that is from looking at these intraday and after hours levels. When a candle falls really hard to low of day, do I think it's a good place to enter? You see most of the time they get bought up and keep running. No, I don't like trading those moves. Like, what's a good example? SPRC maybe? So those are not dips that I buy. Whenever I'm buying a dip, I'm always trying to think about, if I buy here, is there a reason that the stock would go up from my entry? And usually when a stock is just dropping into low of day, there's no reason for me to buy, because shorts are just banking, and until I see a capitulation type move, like a volume bottom or a volume top, volume bottom specifically in this example, there's no reason for me to buy, because the trend is down. If we're hitting low of day, you spike into low of day, and yeah, of course you might get a little bit of a bounce, but then what happens if we test low of day again? Probably goes lower until you finally find a bottom, and then you can maybe look for a higher low. But generally, and especially in this market that's just not that hot, I'm not trading anything that's under VWAP. It's so much easier to make gains and keep gains when you're trading something with a little bit of wind behind your back, and especially in this market, if I'm trying to trade long and something is below VWAP, which means it's kind of inherently weak, that already removes at least one element of edge. And when I'm trading, I want to have as many little pieces on my side as I can possibly have. So um, let's see. I actually don't know where these opened up. I know that this happened today. So like this is kind of a good example, just spiking down to low of day, and you know, where do you get in? Um, there is no entry, in my opinion, until you have a candle that proves that it's reversing. So something like this, where you finally set in a green candle and then the next candle goes higher, that could be a buy. And that would have been, you know, you get in around 276, 275, and it runs to 375. So that's a solid trade in there, but you have to be patient for it. MSS did the same thing today, and I don't know where that ended up either. But like this was an opportunity here, basically over 3, but that only popped to 315 and then rejected again. These are just crazy. GME did a really perfect example of this one day. I don't know how far back it was. When was that? That was let's see. Oh, it was at least a year ago. So I'm not sure that we're going to be able to see it on this, but let's see. Maybe I can look it up. Let's see. GME had a day where it went from like 200, 220 down to, it halted down multiple times down to like 100, and then it finally reversed. I don't know. GME chart. See if I can find it. GME chart sell off. I don't know, but hopefully you kind of understand what I mean. Basically, there's no reason to buy until the trend flips. If something is just crushing down through low of day, because what's happening is the shorts are hammering it, and they're going to keep hammering it until there's a reason to stop out. And so it's kind of like a pendulum that eventually is going to change direction, but there's no reason to find out when that is with your real money. Is this a daily chart? This is a daily chart, yeah. So hopefully that makes sense. Getter is an example. When is that an example from? Today? Let's see. Because I think GETR was... Are you talking about today? Yeah. Yeah, so GETR is not something that I would buy. Because, you know, think about it. Where's the edge in this? The only reason that makes me think that I might buy would be the kind of bottom support there. But you'd have to be really careful, because what if that cracks? And something that's just this week right out of the open, you know, this is 3 million shares of volume in this 1 minute candle here, telling you this is not a long. And then finally you do have this bottom, but then it's kind of choppy, and this just is kind of low quality for me. This is not something that I would trade, and I didn't trade it. So like, especially right now, I'm doing my best to only take trades that I have high conviction or think are high probability of working out in my favor. And something like this that, let's put VWAP back on. See where VWAP was. So kind of proving my point, just I'm not going to buy something choppy like this. There's no pattern, there's no setup, there's no reason that this would go higher. This week you tried to buy more support levels and sell into resistance, and you found it better and clearer instead of looking for clear patterns in intraday action. What do I think of that? Yeah, I think that makes a lot of sense, especially in this market where it has been choppy and a little bit difficult. If you see clear support levels, like this level here, you have to be really patient, but that's maybe not the worst idea, even though it is inherently weak. STTK today was a really good example. You have, and this is where, I can't remember if it was this candle or this one where I took it off of 640 and I got a good little pop out of it. So like that's a reason why I might buy something around those levels when I see something that tells me that there's hidden buyers, basically. And then that's confirmed even more right here with it just not breaking down through it. But eventually, you know, it's not going to hold forever. And then finally, when it does break, you get 640 down to 6. And then another little drop there. So you just kind of have to be careful. And when you're buying support levels like that, just be ready to bail if you need to. And another point is there's no reason to wait until it's breaking down under 635, 630. It already broke the trend, and if it was looking like a lot of selling coming in, and maybe there's a bid there, maybe not, there's no reason really to just keep holding on that blindly. So I think that buying off of support and selling pops, selling into resistance levels is a decent strategy for this market. Just kind of have to be ready and careful with it too. But we're coming up on an hour, and haha, what's up, William? How are you? Eating any good food lately? So, I think that's it. So yeah, we looked at my week. Let's see, we covered my week, covered where I am on the week, biggest gain, biggest loss. Accuracy remains around 50-ish%. Let's see if that was any higher today. I think probably not. Yeah. Yesterday was fairly solid, but still 52. I can't even imagine what Wednesday was. Still 52. Just I had bigger losses on average. If we go back to last Wednesday, which was really solid, still 51%. So for me personally, being 50% accurate is not a big deal at all, because usually all that means is I'm trying entries, and if it doesn't work pretty much right away, I'll happily take, you know, a 1 or a 2 cent loss or so. So I'm getting in and out of trades quickly and frequently, but that's something that I'm trying to hone in a little bit more. Just, you know, in efforts to have a good end to the month and good trading into next year. Because I know one of the things that really affects me is there's 2 things basically. One of them is when I allow myself to be paper cut to death, basically. Like what was the stock? It was CCCC on Wednesday. So let's look at this. CCCC is the one on Wednesday that basically turned my green day into a red day. So I was green on it today, green on it yesterday, but look at this. So this is where I have a big issue, and this is something I want to do a lot better with. Is I was up like 1250 on it, small loss, totally fine, still up 1100 on it. Bigger loss, that's where I took that big loss back down to, I was actually down to 150 on it at one point. Made it all back, and then I just let myself get paper cut to death. So that's a big problem that I need to do better with. That's one of them. And then the other one is over trading a stock that I'm just not in tune with. And that was JTAI the other day. So let's take a look at that. I forget which day that was. It was this week. It was Monday, yeah. So, like, this is not what it looks like for me when I'm trading a stock that I'm trading well. Up 200, down 500. Up 200, down 600. Made a little bit back, down 100 on it. More losses, more losses. Finally, a big enough loss that I'm like, at least I had the good sense to just stop trading it there. So that's something that I know happens to me, or I allow it to happen, and something I would really like to get better at, and it's a main focus for me to work on. And what I'm kind of doing is just it's a combination of mindfulness and just mentality. It's just not that big of a deal to take a little loss on something and just move on before I go green to red on it. And also just really internalizing how important it is to hold on to these gains, especially because the market's just not that hot right now. I know when the market heats up, it'll be great. I have no problem making a few $1,000s on a single move really quickly when it's moving well. But what do we do in the meantime? 1, 2, 3 weeks, 4 weeks, a month, 2 months, 3 months when it's just not hot. You have to hold on to those gains. So trying to work on that. Did a better job with that this week. Still room for improvement. Easily could have had a $5,600 week instead of $3,150 if I had just had a little bit more mindfulness, or whatever it was that I didn't have enough of on Wednesday to keep that. But yeah, that's a big focus of mine right now, and I think we're probably about to wrap it up. I'm running out of questions that I'm seeing here on Instagram and YouTube. Just one last one here. Recommend any books for trading, and also one for options trading, because that's still a black hole for you. I don't do options trading. I used to do options just a little bit. I used to scalp options on Tesla and stuff like that, and stopped doing it because I didn't have any real strategy, and I made and lost a lot of money really quickly. I was like, this is a little too crazy for me. So I moved on from trying to do options or scalp options trades. So I'd only trade equities at this point. I've only read one actual trading book, and it's Trading in the Zone by Mark Douglas. Awesome book. I have Volume Price Analysis by Anna Cooling, and I've read the first 30 pages of it, and then just kind of moved on. Trading books are great, can be great. There's only a couple, I think, that are really, really good, and that's Trading in the Zone. I think there's one called Market Wizards that is another one that a lot of people really like. But, it's one thing to understand the content and the information. It's an entirely different thing to actually execute it in a way that's profitable in the real market. So reading the books is good. Honing your mindset, honing your mental state and capacity and side of things for trading in the market is a great thing. But nothing beats just practice in the market, which might be with the sim, hopefully, if you're not profitable yet, or you can trade one share at a time too, and build stats from there and build confidence from there too. But those are my thoughts on that. Basically, there's no reason to be losing real money in this day and age. There are plenty of options to use a simulator or something other than real money. Or if you only can use real money for some reason, there's no need to be trading more than one share at a time while you're learning. Because the point isn't to make money. When you're learning, you're not going to make money while you're learning. The point is to find a process and a strategy that works for you. And once you get that in place, then you can start kind of adding some share size and other factors to it. But it's all just a constant process of trying to get a little bit better, trying to suck a little bit less. uh, so nice. That's a cool comment on YouTube there. Yeah, I don't know who that is just from your icon there, but always love hearing if I ever help anybody out. That's huge. That's really cool. It's a important part of what I do, I think. I started trading with a YouTube live stream of trade ideas and a live chat on that live stream. And that was an awesome way to start for me. It was really helpful. The people in that live chat were great, and anything I can do to give back is really rewarding for me at this point now that I'm in a position to be able to give anything back. So always love hearing that. But I think we're just about at a good place to call it a day. Let me know real quick if you have any other questions, anything else for me to cover. Otherwise, I think that's a pretty good little week in review. Good overview of stuff that I'm looking at to improve. Stuff that I'm looking to improve, how I'm thinking about actually doing that, actionable items for me to think about next week. One thing that I'd like to do better is just come into Monday a little bit less hot. I seem to come into Monday just really excited to be able to trade again. A lot of you day traders probably are like me, and the weekends are like a little bit boring. Trading the market is exciting and fun and rewarding usually. So by the time Monday comes around, you're like frothing to make some progress, hit some good trades. But the most important thing is just be patient until the market shows us what the day is calling for, regardless of are you excited or not. Because Monday was pretty difficult this week for me. This was Monday, super choppy. I did fine right at the open, and then chopped around the rest of the day. Awesome, Tristan. Yeah, would love to see you on some Warrior Pro mentor sessions. Whenever you're ready, we're there. But I'm also thinking about doing these maybe like end of day Monday reviews, like what does the week look like. Potentially could think about doing more of those, or starting to do any of those actually. Maybe thinking about doing some more week in review type stuff each Friday. I don't know. But like here's a good example of a Monday that I just came in too hot. And I think probably the previous Monday too. So let's see, Monday. So that one actually went okay, but was not super clean. Basically, I know that I need to be patient on Mondays, even though it's fun. Would I ever consider doing my own thing, live trading on YouTube and building my own thing out? I don't know. We have a really good thing going at Warrior, and I really like working with Ross. He basically was my day trading hero when I got started. Saw this bearded guy on YouTube who was making a lot of money and seemed to be pretty honest and transparent. I'm really happy to be part of that team all of a sudden, Who knows what the future holds? I want to be able to be in a position where I can help people to find success, if that's if that's what they're looking to do with success in the markets, or however I can do that, whichever way I can serve you guys best. And I know that sometimes the just like a weekly or every other week kind of free thing on Instagram or YouTube is always fun. So I'm not totally sure yet. I am interested in growing out this YouTube channel a little bit more. So we'll see what we do with that. But no major plans at the moment. Weekly recaps would be awesome. Okay. Yeah, so you guys feel free anytime to message me on Instagram or wherever you can find me and let me know. Let me know how I can help. What's up, Tucker? You'd love to see me more on YouTube. Okay. Let me know what you'd like to see. I'm happy to do these kind of just like general review sessions, general talk sessions. There's a lot to talk about with the market. We didn't even get into talking about the actual market, which is a whole other thing. But yeah, you guys know where to find me. Instagram, YouTube. Leave me comments. Send me messages. Tell me what you need. Tell me how I can help. And always happy to do that. So anyways, we'll call it a day with that. Hope you guys have a great weekend. And I'll see y'all back